BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the European Market Open. A minute to go until the start of cash equities trading. Here are your headlines. Open to talking about tapering. At some point, Fed minutes give the market plenty to think about, but stocks lack direction. The crypto yo-yo takes another turn with Bitcoin plunging and rallying 30% in the same day. Cathie Wood tells Bloomberg it can still hit $500,000. And the Biden administration changes tone on Nord Stream 2, saying stopping it is a long shot. The State Department also waived sanctions on its builder. Good morning, everybody. Welcome back to the second hour of the European Market Open. Just 15 seconds to go until the start of the European equity trading session, and futures are pointing to the upside. Bear in mind, of course, the European markets lost more than 1% in yesterday's session, so we're expecting to bounce back to make up some of the lost ground against the US, which did recover late in its session, despite what it heard from the Fed around tapering, or at least talking about possibly in the future some tapering. So we'll get into that conversation in just a moment. Let's have a look where we're opening then on these European equity markets, expecting then to catch up with the US a bit. The FTSE 100 opens 0.3% to the upside. The IBEX in Spain up around 0.4%. Of course, this was a bit of a surprise to many of the people we've been speaking to, the fact that the Fed did include these comments around tapering. It is just a number of participants who suggested it might be appropriate at some point in upcoming meetings to begin discussing a plan for tapering. So it's heavily caveated. But the first real mention in these minutes then that this could be on the radar, could be on the agenda in the months ahead. Many people have been talking about this being something of a subject at Jackson Hole, but perhaps this was a little earlier than we had anticipated. Anyway, thinking about where that Fed conversation leaves us and what that does to inflation concerns as we see these markets rebound from the sell-off we saw yesterday, that was driven by those inflation concerns and also by chaos in crypto markets. Inflation fears have been gripping markets of late, but Atlanta Fed President Raphael Bostic says now is not the time for the Fed to withdraw monetary support.
We've never had an experience with a pandemic. There's not a pandemic response chapter in econ textbooks. So we're going to have to be very nimble in terms of our monitoring of the economy and our policy responses. You know, when I think about where we are right now from an economic perspective, the word that comes to my mind is transitional. Like, we've gone through this pandemic, we've seen the loss of millions of jobs, and now we're transitioning out of a pandemic space as we've gotten that public health challenge under control with vaccines and better management of social distancing and other measures. Now we can turn ahead. And so we're actually transitioning out of the depths of a pandemic into a recovery period. And it's just a lot of moving parts that we'll have to keep tabs of. What I will say, though, is that I'm expecting a lot of volatility over the next several months. They're going to see fits and starts. You mentioned that in the last several months, we've had data points that have not met up with expectations. I think that's to be expected. And what that will mean is that we're going to have to do extra work. And at our bank, we do lots of surveys of business leaders and communities. And we also do a lot of outreach to have one-on-one conversations with folks on the front lines to get a better sense of what they're seeing, and more importantly, perhaps, how they're thinking about what their strategies are going to be moving forward.
That was Atlanta Fed President Raphael Bostic speaking to my colleague Mike McKee here at Bloomberg. Coming up on the programme, remarkable exuberance as the ECB flags elevated risks of financial stability. We'll discuss Europe's recovery. We'll also get our next guest's thoughts on what we heard from the Fed and what that did to expectations for where the Fed goes next and where that tapering conversation comes to the fore. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Welcome back to the European Market Open. 6 minutes past 8, 6 minutes into our European trading session, and we're making some decent gains across these European equity markets. Not entirely bouncing back from where from what we lost yesterday, though, as we're fearful of inflation and watching cryptos spiraling downwards. Let's get a sense of what's on the move this morning, though. Danny Berger has a breakdown. Danny.
Anna, Kingfisher to the move up today, reporting earnings. They're looking strong. They're able to upgrade their guidance as well. It's kind of this DIY effect from the pandemic, and it just shows that that type of behavior is still going strong for a lot of these companies. Now, to the downside is BT Group. They've eased some of their immediate losses that they saw when they opened up. So let me go ahead and show you where the prices are on that stock. Now, this has to do with a rival, or its rival rather, Telefonica. O2 has been given the green light to merge with Virgin Media from UK authorities, so that's sending shares down nearly 1%. Finally, last earnings-related mover for you, Royal Mail, again, seeing its profit increase during the pandemic period. A lot of this has to do with their shift from letters to really focusing on parcels. If everyone online shopping, that's good news for Royal Mail, so those shares up nearly 2%. Finally, when it comes to sort of the equity market as a whole, especially looking at U.S. futures so far this morning, it is pretty remarkable that we've seen some resilience. They've started to turn lower, but it doesn't look like it did yesterday. And we saw NASDAQ 100 index, the cash trading, and higher yesterday. So it's sort of this back and forth, but we are continuing to see dip buyers emerge. But we're also seeing some of those higher yields ease off after the FOMC minutes yesterday, and that means that the lower lowering of yields today is giving the dollar some breathing room to move a bit lower after heading higher yesterday, Anna.
Absolutely, Danny. Thanks very much. Danny Berger with a breakdown of some of the stocks on the move and indeed the macro movers as well. Let's get a Bloomberg Business Flash. Top corporate stories here at Bloomberg. Here's Laura.
Thanks, Anna. EasyJet is expecting a summer of gradually recovering demand for travel. It now sees only about 15% of its pre-virus capacity in the current quarter. It previously expected 20% for the first 3 months of the year. The discount carrier reported a loss of £700 million.
There's still very limited visibility beyond, the Q3 that we are in. We only expect to fly around 15% as an example of 2019 capacity Q3. But the trend is definitely there. And we know that there's a huge pent-up demand for people to travel. So it's all now down to the restrictions being unwinded.
Waymo is said to be talking to outside investors about raising as much as $4 billion in additional capital. The self-driving car company has also discussed plans to eventually list publicly, spinning out from its parent Alphabet. This comes in the wake of a string of recent senior departures, including its CEO, CFO, and others in recent months. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura writes in London. Now, European equity markets then trading a little bit higher this morning, getting a chance to react, of course, for the first time to those Fed minutes, but actually pricing in some of the gains that US markets, well, the losses and then subsequent gains that US equity markets made, despite the taper talk. Taper talk is potentially on the table as early as next month from the Fed. That is according to the Fed's minutes from its April meeting. Officials held interest rates near zero and pledged to continue their massive bond purchases until substantial further progress had been made on their employment and inflation goals. Joining us now is Sarah Hewen, who's with us this morning, Chief Economist for Americas and Europe from Standard Chartered. Sarah, good morning to you. Let's start with the Fed conversation then. It seems as if markets reacted in a sort of knee-jerk way to mention of taper for the first time and then read all the caveated language and tried to work out, okay, how many is a number of participants, and then relaxed a little bit in the market's response. What did you learn yesterday? What was your takeaway from the Fed minutes?
Yes, I mean, it was the first signal, I suppose, the very first tentative steps towards ultimately tapering. But the language was very, very contained. A number of Fed members, if we make a comparison with the language that we had from Ben Bernanke back in 2013, where he laid out, in the coming meetings that, what the Fed would do, that the Fed would take steps to taper, then we're still quite some way even from the discussion. In our view, it's likely that the tapering discussion doesn't really kick off until July at the earliest, or possibly it starts to pick up at the Jackson Hole meeting in August, or even as late as September. It's going to be very data dependent. Let's see what we get from the next round of jobs and inflation numbers. I think those will be key determinants.
Right, and so, in a sense, did you already know what was in the meeting, the minutes that we heard about yesterday from the Fed? Did it shift those expectations at all? You talk about the tapering conversation happening then in the summer, Sarah. Was that always your view? And yesterday's commentary from a number of participants just reaffirmed that would happen?
Yes, I think broadly that's the case. But we have also, of course, since the Fed meeting, had some very clear commentary from Clarida in particular that the tapering discussion is still some way off. Powell in the post-meeting press conference also talked about tapering discussion not being on the table yet. So I think that we have to really bear in mind that from the Fed's perspective, there is not yet substantial progress being made towards the Fed's targets on employment and inflation. And therefore, the tapering discussion is indeed not imminent. And I think that although, there was a sort of first signal that some members certainly believe that, the discussion could be on the agenda in the coming months, that's a very, very gentle lead into that discussion. Ultimately, we know it is going to happen. We're expecting that tapering will start in the first quarter of next year, but that still gives plenty of months ahead for that discussion to take place.
Yeah, an important early staging post, perhaps, in the run-up to those conversations. Thinking about the data, you said that we're going to be data-dependent, and you're watching the jobs data and the inflation data, of course. Where do you look for meaningful clues, Sarah, as to how much the US economy, if we stick with that, is recovering and getting back to what it was, in a sense? I mean, do you compare year-on-year data on jobs, on inflation, or is there a way to go back to 2019 and think about how we are recovering in that context? Because, of course, the growth number is impressive, but they certainly won't tell the whole story.
Yes, we definitely have to look at the baseline. The growth numbers are inevitably going to be impressive given the very, very sharp downturn that we saw this time last year. So the question is, how quickly do we get back to the pre-pandemic level of the economy? I mean, that's very imminent, but also at what point do we get back to a trend rate of growth? Now, that may be several quarters away. And for the Fed, and I think for most analysts, the employment situation is absolutely key. Although we've seen very dramatic increases in payrolls over a number of months, albeit not the last report, the number unemployed is still many, many millions. And in the meantime, of course, the working age population will have increased. So it's not enough just to go back to the pre-pandemic employment level. We need to see even more jobs gains to really be back at that full employment situation. Now, we think we'll get there, but not until 2023. So that's the point at which we think the Fed will start to really raise rates.
Okay, and so that's why you've got those Fed rate hikes in the first half of 2023. Sarah, let's pause the Fed conversation and move the conversation on to Europe and hear from another voice or two. The ECB is warning of elevated risks to financial stability as the bloc emerges from the pandemic. It's cautious of the high debt burdens on the continent and what it sees as remarkable exuberance in markets. Still, the central bank's vice president, Luis de Guindos, is relatively upbeat on the economic outlook despite the risks. This is what he said.
Risks looking forward and going forward are much more balanced than in the past. On the one hand, you have the speed up in terms of vaccination. Vaccination is gaining momentum everywhere in Europe, and we are catching up. We are reaching the gap, as I said before. On the other hand, you have risks and uncertainties. The variants of the virus.
Luis de Guindos speaking to us at Bloomberg. Sarah, coming back to you on this then. So the ECB warning yesterday about remarkable exuberance in markets. I mean, I don't know if there was probably an intended throwback to Alan Greenspan and his irrational exuberance. Do you think that the levels of exuberance we see in markets are something that central bankers need to worry about? I mean, does the ECB need to worry about this?
Yes, I mean, ECB and all central banks will be concerned when, if there are situations where asset prices seem to be overinflated. And the worry is, of course, particularly given the backdrop of substantial levels of debt, public and private sector debt, having been built up during the pandemic, that, the economy is less able to withstand a reversal of asset prices. So it's natural that policymakers will be concerned about that. Now, let's look at what the risks are out there. The main risk is that we see a run-up in inflation, which drives interest rates substantially higher, much higher than markets are expecting, and sooner than markets are expecting. And then under those circumstances, highly debted governments, highly debted companies will start to run into difficulties. It seems as if we are still some way away from that. There's plenty of slack, despite the rapid rates of growth that we're expecting over the next few months. So we don't expect to run into those sorts of issues.
How geared do you think the European economy is to US stocks, though, Sarah? Because I was interested in this line in their report yesterday, a 10% drop in US stocks, which is not unfathomable, I suppose, would tighten financial conditions to such an extent that it would risk derailing the European recovery. Is that the level to which these things are linked then? That's quite a linkage.
Yes, it's an interesting linkage. And I would question the extent to which that would have such a knock-on effect to the broader euro area economy. In the US, of course, the sort of stock holdings are a greater share of household wealth, and that's less the case in the euro area. But I think it's more the disruptive impact of such a dramatic 10% decline in stocks. We've been there before, and we know that, you know, and if you get such a drop without a subsequent leveling off or recovery, then there are repercussions. So policymakers have to be very sensitive to that. It's a difficult tightrope to tread that would lean towards keeping policy accommodative, but at the same time, you don't want to further fuel the fire.
Let me ask you where you expect bond yields in Europe to go, Sarah. We've seen the bond yields have been edging higher in recent weeks, some anticipation of economic recovery and a lot of talk about when we're going to start to see more positive bond yields across Europe. From an economist perspective, what are you expecting to see in that bond market story that will also weigh into the ability of these European corporates to continue to borrow and survive?
To be honest, we've seen a faster run-up in bond yields than we had expected. We were really looking for broadly stable Treasury yields, and that indeed has been the situation. So looking for Treasury yields to stay in that 150 to 175 range over this quarter and the next quarter, and then rising up towards the sort of 175 to 2% range after that. With bunds outperforming Treasuries we'd expected. What seems to have happened is that the a new optimism over the region, over Europe is building up. You know, quite rightly so, given the success and the acceleration of the vaccination program. We're a little bit hesitant about the variant that emanated originally from India. We've seen that's having an impact here in the UK, and we know that it's only a matter of time before it starts to make its presence felt across the euro area. So the opening up story is broadly on track, and the economic recovery is on track. Bond yields are reflecting that. But we do introduce a note of caution here. The pandemic is not yet over by any means.
Sarah, thanks very much. Thanks for giving us your thoughts. Sarah Kewen, Standard Chartered Chief Economist for Americas and Europe. Sarah will be continuing her conversation with us on Bloomberg Radio at 9 a.m. UK time. That's where I head in around 40 minutes from now. Coming up, though, on this programme, a long shot. That's what the US government calls efforts to stop the Nord Stream 2 gas pipeline. We'll get that story, relationships between the US and Germany, very much to the fore. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
If Russia acts aggressively against us, our partners, our allies, we'll respond. And President Biden has demonstrated that in both word and deed, not for purposes of escalation, not to seek conflict, but to defend our interests.
That was U.S. Secretary of State Antony Blinken speaking after his meeting with Russian Foreign Minister Sergei Lavrov on the sidelines of the Arctic Council in Reykjavik. Shortly before yesterday's meeting, the U.S. waived sanctions on the company overseeing construction of the Nord Stream 2 pipeline. The Biden administration called efforts to stop the project a long shot now that the gas pipeline from Russia to Germany is 90% complete. For more on this, joining us now is Bloomberg reporter Birgit Jenen. Birgit, good to speak to you. So this sudden shift then from the United States, kind of saying we're not going to get to stop this. Look, it's 90% there already. Was it all designed to bring the US and its traditional European allies like Germany closer together ahead of this conference where the US and Russia would be talking about this?
Yes, I think the bigger picture is really that after the Trump administration, which had a very tense relationship with Germany on a million of issues or a lot of issues, but including and in particular also about Nord Stream, that the Biden administration is now clearly sending a signal saying to Germany and to the European allies, look, we want to work together. We don't want to make this issue, the Nord Stream pipeline, such a stumbling block in our global efforts. It reaches from finding a way out of the corona crisis towards climate and obviously also China. So this is a clear signal to say, look, we are going to have a new start and we will continue talking about Nord Stream in the long run.
Continue talking about Nord Stream. They're having a new start, a new reset, if you like, maybe for this particular relationship between the US and Germany around this specific pipeline. What's the importance then of the Nord Stream pipeline in the region? Of course, it's been many, many years under construction, providing an alternative route for getting gas from Russia to Germany.
Well, for Germany, obviously, it's largely an economic project. Basically, Germany needs this cheap gas from Russia in the medium term, at least until the transition towards new energy has been reached and fulfilled. So for Germany, the gas is really of economic vitality, yeah? But politically, and the U.S. argument has been, and rightly has been, that obviously in the region it's not just an economic, it's primarily a political instrument from Russia to basically keep Germany linked towards Russia and basically make Germany dependent on Russia. So there is this double meaning and of the Nord Stream pipeline, and this has to be somehow solved in the long run.
Yeah. Birgit, thanks very much. Bloomberg reporter Birgit Jenen giving us the latest news flow and the important backstory around Nord Stream 2. Now, coming up, the crypto yo-yo. Bitcoin loses more than 30% of its value in a morning and then surges more than 30% in the afternoon. What is next for the digital currency? That conversation next. This is Bloomberg.